All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and today is Monday, October 26th, and this is your end of day recap. So, where did the indices finish for the day? SPY finished down 1.8%. Qs fared a little bit better, down 1.5%. The small caps, as well as the Dow, both finished down over 2% for the day. TLT, bonds rallied today. So this was pretty much a risk off tape across the board. You could see what the VIX did today. It jumped up. The 1 day change was up 17% for the VIX. So big jump. So what was the catalyst for this move today? What was the theme of the day? I would say short-term negatives pile up, right? I don't think it was one particular thing that drove us down. I think it was actually a few different things that basically happened as we got into Monday morning. Number one, probably wasn't even on the top of my list in terms of worries. If you've heard a lot of my videos from last week, I talked about a lot of short-term things, which I'll go into in just a second. But COVID was really kind of dominated the headlines today, especially in Europe and in the U.S. So previously, and again, I'm not an expert on COVID, so I'll just kind of go over a couple things that I think are notable. But of course, cases are high. They're high in Europe and they're high in the U.S. They're both record breaking, and really, what I think is more important is the hospitalizations and deaths. Now, these things, in my opinion, and well, maybe not in my opinion, but I think this is how it works. There's a lag between when you get it and if you have to go to the hospital, and then further if you get very, very sick. So that takes some time for it to before you see the data. And I think right now is what we're seeing is that a lot of hospitalizations are going up. So bottom line is that's a negative, right? So it's a negative to see that move to where it is basically going to for COVID. So that is definitely a negative. Number two is we have no stimulus that we keep hearing about, that these politicians are optimistic about getting something done, but in reality, they're not getting anywhere. And they probably won't get anywhere until after the election, after it's determined, who's going to be in office. And, from there, at least that's the way I see it. So that is another negative in the short term. Number three, we have a lot of earnings this week. 38% of the S&P reports this week. And so that creates a lot of uncertainty in the short term. Now, once we get through this week, we will know where some companies stand. And depending on the results, we also know that right now, I was reading this from a Bloomberg reporter, that names that are missing their EPS are getting hit harder than normal. So the price action is it's tilted to the downside if you do not beat your expectations. So we've got a lot of big companies coming out on Thursday as well as Tuesday. If someone put a gun to my head and said, "Hey, what are the one or two most important reports for this week?" It's probably Amazon to me, and then Apple's second to that. But Amazon has a lot of businesses where we're going to hear about what their API data is doing, what their cloud data is doing, and how the consumer is doing as well. Maybe we'll get some information about Prime Day. So that should be a very important week, but there's going to be a lot of important reports this week. AMD also reports tomorrow after the close. I view that as a very, as a much bigger, more important report than Intel, who reported last week, who's a laggard in the industry. So Intel and a couple other names like a Taiwan Semi, which are already reported, as well as NVIDIA. Those are the important reports, I think, out of that sector. So we'll see how that goes. All right. And then I didn't even get to talk about the election, but that is also going to be in a big event. Now, the positive is that if you could make it through this week without too much damage, right, with all this uncertainty and events, you might get some really good buying opportunities, right? And I think that this move down in the indices, somewhat, I don't want to say expected, because I wasn't, I didn't think that these COVID cases would grow at this rate that they are growing, as well as the hospitalization. So, but I did think something would upset the apple cart in October. Haha. So some of which the short-term volatility I think was expected. Did I know what day or whatever it was going to occur? No, but and we could still have more of that as the week progresses. We just don't know. What I do know is some things to kind of watch. So let's talk a little bit about the price action for the day, which I thought was very difficult because it was whippy. The Qs, launched higher in the first half hour of the day. Why? I have no idea. And I wasn't really following it. I didn't chase any of the price action. I try to wait for things to settle in a little bit and then put a couple trades on, which didn't really work and basically got stopped out of those trades. But why I thought it didn't make sense is because Euro stocks and the DAX in Europe were very, very weak this morning. So going into the U.S. cash open at 9:30, the DAX was down like around 3%, right? That's a wide spread for the S&P just being down. The S&P wasn't even down 1% at that stage. That's too much of a gap. I think if we would have started the day around down 1.5, down 2%, it would have been a kind of different day to trade. I don't know why that we weren't down that much into the open, and I don't know why that we rallied like we did. I think people got it in their head as well that the stay-at-home stocks in the Nasdaq were going to lift us higher. But there's too many things going on for that to kind of hold. I thought so. That's why I didn't do very much trading in the first half hour. I did catch a little bit of fear of missing out and did put on a couple trades. But as long as for trading, as long as you're defining your stop, I also try to avoid in the last couple weeks trading options as much. I will still trade options here and there, but I can just define my risk better when I trade the stock. Right? I know what point on a chart that I can get out. In an option, you can't really do that. And a lot of times, if you stop yourself out of an option, you shoot yourself in the foot because it can rally back and, you kind of miss out on the gains. With a stock position, you're not paying, the volatility also in an option, depending on what name you're trading, the spreads are kind of wide. They can be when volatility increases. So that liquidity, you also have a little bit of liquidity risk that you're adding into the equation, along with the volatility, along with the higher than normal volatility. So it's very difficult under normal circumstances to trade options. But when you're dealing with a faster tape and higher volatility, your odds of loss increase in those times for option trading. Obviously, if you catch it perfectly, you can make some nice money, but you have to be perfect with your timing for options. So, if you're very good at scalping, then don't let me stand in your way. Like, continue to do what you're doing. If you're an awesome scalper, if you can get in and out of an option in minutes or sometimes seconds, and you're very good at that, extremely good at day trading, then, have a ball doing that. But if you're thinking about like swing trading options in this environment, it's a lot harder. Your timing has to be perfect. And, you can't say like, oh, I'm in this for a swing trade and, the bottom falls out. Or it rips higher and you're like, oh, I'm not going to take profits because this is a swing trade, right? You could really kind of, there's a lot of landmines. So anyway, let me move away from that and talk about the price action. But, here it was in the first half hour, a move to go green in the Qs, and then a complete smackdown. So a couple things that I see in my charts, right? If you've listened to my videos last week, just a quick summary, I talked about how we lost the short-term uptrend on Monday. We came back, and the positive thing was on Friday we basically almost got back to retaking that 200 period moving average, which is this big white line that goes through my charts, and we almost got back to there, and as well as to the bottom of value for the week. This week we basically started at the top of value and then lost it. Went through that retest, right? So we broke through value. We broke through the value area, came back and retested 34.24, failed pretty decently here, And we did take out this virgin point of control, which I had mentioned several times last week that I thought that it could be taken out. We went further. We don't have a ton of support down here, which is a little bit concerning, but we did bounce back after after the indices got short-term oversold. We got to about a 23 RSI on there, and we bounced back. So we're basically back to this virgin point of control, which again I think needed to be taken out. It's one of those things where you kind of check a box, right? In terms of, hey, there's an area of high volume that we haven't revisited. Often these things act as magnets. Here was one all the way back here, right, where we almost took it out and basically waited. We churned around here for the good portion of a day before we rebounded. So do I think that we can just rebound and march higher? I don't think any of those things that I talked about, any of those events, those issues are going away in the short term. So I'm not saying that we can't, but I don't see any remedy, right, in any of those situations. But if we can kind of hang around here for the week, whoa, I don't want that, and shop around. How do I get out of this? Let's see if I can close this somehow. I don't trade using Thinkorswim. Let's see if I can. Nope, it's not gonna. So anyway, I'll get out of this. But same thing in the Qs, right? So if we look at the Qs as well, how do I close this? Oh, I know how I can shrink it. So let's move this in here. Should be a thing. Oh, maybe I just can't see it. There we go. So I just want chart. There we go. All right, sorry about that. And then see what happens when you go away for. I'm not even on vacation. I'm just up in Boston for a couple days, visiting my niece at college with my sister, and on the laptop. So of course there's always volatility when you go away for a couple days. Isn't that how it works? But in any event, the Qs also virgin point of control was taken out, and you get a rebound over. So that's going to be our mark for the Qs. And we've got a nice level to trade against for the next couple of days. But again, me personally, I'm trying to take it slow. I know I manage a trading room all day long. And for the most part, this week, I just want to stay out of trouble, right? I don't see the risk to return skewed in my advantage. So I'm basically honoring stops. I'm trading very disciplined. Whenever we have, a bout of volatility like this, I try to be as unemotional as possible, right? So I got a gift of this service now. I later got stopped out in the balance of the trade. So for me, I did put on a couple new trades, but it was a lot of switching around of positions. And if I got stopped out in a position, basically what I do, I got in, bought some SE. This is a good example. It fell through my stop. And then if that happens, right, I am okay with taking any stops in this market. If you get whipsawed, so be it. Just make sure you represent your position size appropriately so that you can kind of weather the whipsaw moves. But as soon as I get stopped out in a name that I like, right, because we don't know what's going to happen in the short term, so you have to be disciplined. I right then and there place an alert back at my stop price, and if I see it retake it because of some whipsaw move, I got back into SE, and it's got a chance. It's up to 162. I'm not seeing any major momentum in it right now, but I would like to stay in it. But if it breaks value for the week, then I don't want to be in it because it's a different picture. I was going over that in a couple other situations too, where I talked about, hey, I'm in one trade and I'm looking for a breakout in this name. If the breakout is canceled and the price moves back into the range, I don't want to just sit with the trade because that wasn't the whole idea of the trade, right? I was talking about that today in XME, right? XME, I was looking for a breakout. Now it's basically back into chop, and it could come back out of, it could come back out and trigger along, but for now, it's not, and that's why I took a target in this trade last week too. Right, so out of that trade as well. So again, here's my blotter of trades. A lot of just getting stopped out, and a couple names that I had on last week. A couple of the names I hit one or two targets to the upside, and then you get stopped out on the balance. That happens a lot in choppy markets too. All right. And then just a couple other thoughts that I'll leave you with for the end of the day. It's always important, I think, to. Oh, I want to look at the VIX chart too. It's always important to notice what names hold up better, right? You will find some of your market leaders in a tape like this when the market goes down around 2% for the day, or 1.5% for the Qs, and you find a name that was flat or up on the day. That's usually what we call a lot of times, what we say often is relative strength, right? Those names are doing something different. People wanted to go into, were looking for a dip in those names. So the VIX, by the way, is higher. So, usually we're met with a couple days. Once we see a change in tone like this, it's usually around for a couple days, right? And you can see when we've had other bouts of volatility. Notice that the VIX has been making lower highs, right? We've talked about that for a while. So even though this is a change here, we would need to get above 35, 37 for it really to be a change in trend. From time to time, you are going to see these bouts of volatility, but what we want to see in the next couple of days is to see another lower high, right? So notice here we got up to like a 44. Here intraday we got up to like a 37-ish. We're at a 32 now, so that we'll find out in the next couple of days. VVIX, which is the derivative of the VIX, which is the VIX of the VIX, that lunged higher today, and didn't really trail off from the close. So hang in there for the next couple of days. My opinion is don't get overexposed. But if you've been looking for a dip, right? Everybody always says, well, not everybody, but you hear this a lot, right? It's one of those misconceptions. Oh, if I only had a dip, I could put some money to work and so forth. Well, you got the beginning of a dip here. My opinion is what I like to do is wait for some confirmation, right? Such as we're looking at the VIX, we're looking at the indices. I want to see them hold here. The VIX can go a little bit higher, but I don't want to see it go higher than like a 37, 38. Right now we're at a 32. On the S&P, I want to see us basically hold in here, right? And what I said last week was, hey, I wouldn't be surprised if we break into value for a day or two. But I want to see us work our way back to the upside. All right, that's what I'm looking for. I'll show you again that level on the 1 hour chart. By the way, the 5-minute VPOC was also taken out. And yeah, looking for a move basically is we can chop around here. But I don't want to really see us go lower than, around today's lows. And then also, I think it's a matter of time. If you don't get yourself too caught up with having major risk on right now, I think as the week goes on and as we get through to the election, you're going to find some good opportunities. But of course, they're going to have to reveal themselves as we go along for a good setup. So one of the other things that I've been saying is don't just trade to trade. Wait for something that's jumping off the page to you for a good opportunity, not just because something is down. All right, guys, we'll leave it there. One stock, I don't go over enough stocks in these videos, but one stock that I'm watching that I did trade a little bit of options all the way out to January is Lowe's. I do like this coming into support here, the 50-day moving average, as well as 165.36 top of value for the month. And apparently there's another hurricane out there. Welcome to 2020 in terms of bad news. But this should, hurricanes, unfortunately, names that benefit are Home Depot, Lowe's, ENPH, Generac. Sorry, not ENPH, but Generac is another name too. But I like the relative strength in Lowe's. So this was a good entry place for me. All right, guys, that's it for today's video. Have a great night. See you tomorrow.